We've all heard that millionaires pay less tax than the rest of us do. We've also all heard stories about very wealthy people being caught for tax fraud or tax evasion or insider trading or generally just doing dodgy things with their money in order to hoard more of it, even though they already have so much of it. These stories, combined with the very damaging rhetoric we have that villainizes the rich, have worked together to create this overall idea for most people that wealthy people pay less tax than the rest of us do because they're doing illegal things with their money, when in fact, this actually could not be farther from the truth. The tax code has been written in a way that primarily benefits wealthier people, but the same rules of the tax code that apply to them apply to all of us. We do all get to play by the same rules. Most of us don't, however, because we're not taught how taxes work. Most people never take on the mental burden of actually learning how the tax code works in the area that they live in. And there are still a lot of people who have this misguided idea that it's bad to minimize your taxes. And I just want to reiterate that everything that I'm going to talk about in today's video is not only completely legal, but it's been designed and written down in the tax code, which is created by the government that you live and work under and pay taxes to, so you might as well learn how to use it. They wrote it for you. Diving in, why is it that a millionaire who's earning more money than you is likely paying a lower percentage of tax than you are? The first thing to understand is that traditional income, this means income that's earned through a traditional job if you're earning a traditional paycheck, is taxed at basically the highest rate in all of Canada. This means that if your only source of income is through your employer, through your job, then you're likely paying the highest percentage of tax dollar for dollar than anyone else is in all of Canada. Again, is this fair? Personally, I don't think so. But how do you work with it? You need to learn how to take a page from the handbook of wealthy people and learn how to diversify your income and create different income streams so that you're earning income in ways that pay a lower percentage of tax dollar for dollar than what you are currently paying on your traditional paycheck in the form of income tax. This is going to have the dual effect of bringing more income into your life, and you're going to pay less tax on that income than you would if, say, you just got a traditional raise. Some of these forms of alternative income include income earned through capital gains, through investments that you've made, dividend payments, income earned through a corporation or a small business. The way that these different forms of income are actually taxed varies from year to year, based on scale, based on your location, but the overall idea here is that if you start supplementing your income, you're going to pay less tax on these other streams of income. If you're able to completely replace your traditional paycheck with money earned through these alternate streams of income, you're going to be paying less tax then than you are today on your paycheck earning the same amount of money. Now, the big question is, why am I teaching an episode on this today? Why is this so important? And the answer is because taxes are going to be your single biggest expense over the course of your life. A Canadian family is going to spend more money paying their taxes than they will on buying a place to live, buying vehicles, on their lifestyle, anything like that. Your single biggest expense category is going to be taxes. And I think that this is so important because a lot of the personal finance information that I see being taught is heavily focused on reducing your expenses, right? So people try to get better at managing their money by cutting out their coffee shop visits and eating in more and buying a lesser car, but they're neglecting to turn their focus to their taxes and how they can reduce their tax burden. And this is where you actually have the possibility of easily and quickly shaving thousands of dollars off of your expenses each year. You can save so much more money by reducing your taxes than you can by reducing your indie coffee shop habit every morning on your way to work. Now, don't worry if you've been sitting here thinking, well, that's all well and good for millionaires, but how do I reduce my tax burden? There is an overall blueprint that you can follow that's accessible to everybody, that's available to everybody, that's going to get you towards this nirvana of earning money that you hardly have to pay any tax on. The first step is you are going to commit to learning just the beginner basics of how the tax code works. This means you're going to focus on learning how to use tax deductions, tax deferrals, and tax advantaged accounts in order to lower your taxable income and or to get a larger tax return back this year. Now, I have several episodes explaining the Canadian tax system, running you through different tax deductions, how the RRSP tax deferral works. These should give you just a broad overview of the different tools that are easily at your disposal to pay less tax this year. And from there, I recommend going on and finding some accountants to learn from. Moving on from there, the second step starts now that you know how to lower your tax burden. Now that you know how to lower your tax burden, you're going to have more money left in your pocket at the end of tax season this year, and you're absolutely not going to use this money to fund your life. Instead, you're going to take this extra money that you have that you otherwise would have paid out in taxes and never seen again. You're going to take this money and you're going to put it into your tax advantaged accounts. So if you're Canadian, this means you're going to put this money into your RRSP account and your TFSA account. These accounts are what's known as tax-sheltered investment accounts. And what this means is when you deposit money into these accounts and you use that money to buy investments and you leave the investments in there over years leading up towards your retirement, those investments are going to grow and compound. Maybe you'll be paid dividends and you're going to be earning money within that account without ever having to pay tax on it while it's in there. So this has huge potential to allow you to earn money without having to really work on it and also without having to pay taxes on it. These accounts also have some other tax advantages, which are kind of cool. The RRSP offers you a tax deferral to lower your taxable income in the year that you make a contribution. You can check that out in other episodes that I have. And the TFSA account is very useful because it allows you to withdraw money from there in retirement tax-free. What this means is that if you've been earning a $50,000 salary and you decide that you're ready to retire and you've built your TFSA up to a point where you can draw a $50,000 salary from it, you're not going to have to pay any tax on that $50,000 that you draw from your TFSA. The third step from there is you're going to look at how you can take any remaining money that you have left over and use that money to create other income streams for yourself that are either passive income streams or that are taxed at a lower rate. Examples of this could be investing more money through a non-registered account that isn't tax advantaged, but you still pay less money on dividend income and capital gains income. You could invest in real estate. You could use some money to jump on your small business idea and start a small business or a corporation. These are all things that it requires a little bit of money to get into to start for the most part. But once you get started, they're going to provide you with income streams that will pay out in spades over the course of your life, both in terms of how much income they can bring in, and also, on the other hand, in reducing how much of that income you pay back out to the government in tax. The biggest thing to take away from this is that if you are willing to self-educate, if you're willing to be diligent, and if you're willing to learn how to play this game the right way, then it's absolutely accessible for you also to one day become one of those coveted millionaires who gets to draw a salary from their assets without having to pay such a massive percentage of their salary back to the government in the form of taxes.